I just think there's a big mismatch in terms of knowledge. But people are going to see this. Like Forrest said earlier, people are going to get rugged and they're going to look for an alternative. People are going to get locked out of the SWIFT system. They're going to find an alternative. People are going to have their bank accounts frozen. They're going to find an alternative. And as more and more people find that alternative, which is clearly Bitcoin, there's more people fighting for the same amount of units. That's what pushes the price up over time. It's really that simple.
Yep.
Yeah, he said he meant Bitcoin, but he then also said that not just price, but also adoption and value, which is a fun question because like what actually brings more people to Bitcoin? Is it because Bitcoin is so good or because the other system is so bad? I think because the other system is so bad and Bitcoin is good, is an amazing alternative. And so if you then look at like what's worse, is it the nation state trying to do things? Is it the central banks doing things? Or is it just like the local banks being that bad? It's probably a mixture of all of them. I don't know which one is the main driver driving people towards Bitcoin and self-custody. I've heard a ton of people that got their account frozen or closed or any of those things, and they're like, oh, I'm searching for alternatives now. I've heard people from Russia and Ukraine saying, because of the war, I'm getting into Bitcoin. I've heard like, because I have friends in Russia and I have friends in the Ukraine, and they, after the war, they were a lot more susceptible to what I'm saying on Bitcoin. And actually one or two reached out to me and saying like, all the things that you have said to me now make sense because they lived through it and they saw it, not just on the Ukraine side, also on the Russia side, actually. It's not just one side. And so what is more driving Bitcoin adoption? I don't know if it matters. All of those things drive Bitcoin adoption. A bad banking system, horrible central banks, and bad governments doing war things. All of them are really pretty bad for, pretty good for Bitcoin. Like pain drives behavior.
Yeah, Bitcoin is an escape. It's the only, like, people that are looking at it for like the price appreciation and stuff, they don't realize that they're actually just escaping from the price depreciation of their dollars. Like that's really kind of what they're escaping from. So it's sort of like a mind shift there. But I would say that Bitcoin is the solution to all of the problems of fiat. And that doesn't mean that it's like, if it was for the good, like people would be like, oh, Bitcoin's easier. Well, self-custody is not easier than, using a debit card, but, setting up banks and stuff for this business, it's been kind of a nightmare. It's been really annoying. It's pretty easy to actually just throw a QR code up and start accepting money. No one can censor, no one can tell you not to. So in some ways, it is easier. But there are certain things to learn and all of that. So like, it's the best system that exists. People haven't realized that yet. There's slight learning curves to do that. It's definitely 100% the best. And it's also the fact that everything in the fiat system is so terrible. And like, we have the exposure to the best fiat system being in the West, right? Like, It's the easiest for us to get bank accounts, to get credit cards, to get loans, compared to many other people in the world. And so if Bitcoin is good for us, then it's great for them. So that's the way I see it.
100%. Maybe it's a good time just for after an hour now that we make a quick shout out to the BTC Mastermind channel, because I think it's we really got far already. We joked about it before, but I think 400 subscribers hitting that goal is freaking amazing, especially in the low sentiment, like in the bear markets.
Yeah.
And with just the thing that is currently going on. We also have as many live viewers on the BTC Mastermind channel as we never had before. We have about 25 watching on average the last couple of minutes. So if you watch on any of our other channels, on Rashad's, on mine, on Forrest, on whatever channel you're watching, or even on another Twitter or something like that, we intend to make BTC Mastermind the main channel, the hub, the community, the thing where everything is happening. Also, if you listen to this on replay, you can leave a comment, and this is also a source for me to figure out what comments are, what inputs for the next week I'll give. This topic that we're now discussing, the retirement topic, actually was inspired by a guy that wrote about a retirement question that he had. But really important for everyone that is interested in our conversation to be on the BTC Mastermind channel.
We were joking about it because Robin said, "Oh, it's pretty impressive. We're almost at 400." And I said, "Well, we should be at like 400,000 right now." And I say that not because like I think we're the best at it. I just think that we're talking about the most interesting topic in history. I would say Bitcoin is like it's the new Ford Model T. It's fire for the first time. It's the equivalent of that, and it's just like it's amazing to me how few people care. But at the same time, I get it because that whole system, we've been talking about how it feeds itself. It distracts people. It keeps them busy. It keeps them on the wheel. They don't have time to hop off the wheel, study money, study Bitcoin, study what's really going on. So shout out to the people who are here, and a special shout out to the people who are watching on the BTC Mastermind channel right now.
Yeah, definitely head over there. It's where the chat is really happening. Otherwise, like we have to have each channel's video up and commenting on YouTube to reply to you guys in the chat. Just not something that's realistic. There's lots of comments I'd like to have replied to, and I just can't go to Robin's channel and Rajat's channel and George's channel to go over there and reply to them all individually. So if we get everybody over on there, we can have a concentrated chat, and that's going to improve the show a lot and improve your experience as a viewer as well.
One question that everyone asks in the retirement topic, and something that people always keep asking, but there is not a really good answer for that. Maybe one of you three guys have a good answer for that, is how many Bitcoin to retire? For me, clearly there is not a number, but like an explanation of how you might be able to get to a number. How do you guys think about that? And I think Rashad said also something earlier that you have a framework to think about how to retire 10 years earlier, something like that. Maybe that's also interesting.
Yeah. So the way that I look at it, you have to think about your expenses. You have to think of your income. You have to think about what your life is like right now. If you want to maintain that life, if you want to make it better, if you want to have some kind of lifestyle inflation, all that stuff is very important to know. And if you can put all that together and then you can get a number, it's possible. Where the way that I look at it, you want to have 20 times your annual expenses as your Bitcoin stack, just to be conservative. Because if Bitcoin falls 50, 60%, you don't want to have to sell like 40% of your stack to pay for your expenses that year. If you have 10 times, then that's going to be the case. But if you have 20 years of expenses, you can technically, you can sell 5%. Let's say, for example, you have 20 times your Bitcoin, your expenses as your Bitcoin stack. You can sell 5% of your stack to pay for your expenses, and your stack will grow more. So let's say it grows 20%, you have a 15% growth even after you sold 5% of your stack. I think that's the way to look at it. If you look at it from that perspective, I think the possibility of having to go back to work once you retire is I don't think you're gonna have to go back to work, to be honest. Unless you choose to go back to work, you can borrow against your Bitcoin. You can buy things like STRC. You can do something that creates cash flow, but you probably don't have to go back to work at any point. And the exact amount of Bitcoin really relies on your expenses. So if you have, let's say, $5,000 of monthly expenses, you'll need a certain amount of Bitcoin. If you have $10,000 worth of expenses, you'll probably need double. And it also depends on what you think the inflation rate is going to be. If inflation is going to be 2%, then you need a certain amount of Bitcoin. But if inflation is going to be like 15%, then you need way, way, way more Bitcoin. I think that it's all personal. I think it's possible to run the numbers for yourself. Actually, that's what a lot of people, I think probably for you guys as well, Jor and Forrest, that's what a lot of people have been booking meetings with me for, just to get those numbers. And I had to make a video explaining what your retirement number is. I think that was super valuable and just helping people to figure out where they need to be planning for, how much Bitcoin they need to have.
Could we look at that? Like, could we let's just assume our audience is like 40 years old, wants to retire in 10 years. Because I mean, I agree with you. Like, it really depends on your age, your income, and I guess where you are too. And you know, what your lifestyle is.
Yeah.
So I think could we look at like a 40-year-old who wants to retire in 10 years, who has, you know, sufficient income? Maybe they don't have a whole lot of income coming in, but they're not going to have to sell their stack, I guess.
Yeah, I mean,
What number would that be for like a 40-year-old?
oh yeah, okay. So let's see. I can share my screen here. So the way that I look at it, let's say for example, if you don't buy any more Bitcoin, if you buy $0 worth of Bitcoin, how much Bitcoin would you need? Okay, so if you buy $0 worth of Bitcoin, your monthly expenses are 5K. How much Bitcoin would you need to have 20 times your monthly expenses in your stack? So years of savings, essentially. 20 times means 20 years of savings. So if you have today, let's say you have 20 Bitcoin. Today, 20 Bitcoin will give you 22 years of savings if you have $5,000 of monthly expenses. So in that case, today, if they wanted to retire today, they'd need 20 Bitcoin. But let's say
That's
they
it?
wanted to, that's, I mean, that's not, actually, I agree with you. It does sound low.
No, I was joking. That's a lot of freaking Bitcoin.
Oh,
I
okay.
don't know if anybody watching this would have 20 Bitcoin.
Right. But I feel like there are people out there who have more than this and they're still thinking, can I retire on this yet?
And that's retiring today, right?
Right.
retiring
That's
today,
yeah,
that's
right.
That's not the example of a 40-year-old. A 40-year-old,
Right.
you know, maybe 60, 65. So
Yeah.
that's
So
20
let's see.
years from now.
Yeah. So let's see what that would look like. So let's say, for example, they have 1 Bitcoin today. In 20 years, so 2026 to
I want
2040.
10 years.
10 years. Okay, 10 years. So 2036, that 1 Bitcoin will be worth, well, based on what the price is right now, this is with a 10% growth. So what I'll do is what do you guys think should be the growth?
21.
21%. Okay, 21%. So 21% growth. You have 1 Bitcoin. That 1 Bitcoin grows from 68K to 460K. And you'll have 4.7 years of savings.
Okay.
So we'll go 4 Bitcoin.
That's not bad.
Like 4.2, actually, 4.2. So 4.2 Bitcoin 2036 would be worth 1.932 million. Your annual expenses would have gone from 60K to 97K. In terms of Bitcoin, they would have gone from 0.87 Bitcoin. And I think this is actually really special. So they would have gone from 0.87 Bitcoin to 0.21 Bitcoin per year, which is pretty crazy. But your expenses in dollar terms have gone up, but they've gone down 80% in terms of Bitcoin. So
But
your
what if I wasn't spending any of my Bitcoin?
So if you weren't spending any, so you'd want to borrow against it?
No, I just like, let's say that I just had a stack of Bitcoin, but I also have like an income coming in for the next 10 years. So I don't have to use my Bitcoin or sell my Bitcoin. I can just keep that point. Oh, that's expensive. Sorry, Rajat. Sorry.
No,
I
that's
think
okay.
I got confused there.
So this is
I
based
still
on,
have my
let's say,
stack. Gotcha.
let's say you have 4.2 Bitcoin. Let's say, for example, you've been stacking, you have 4.2 Bitcoin. And then you're like, I'm not going to buy any more. I'm just going to live my life for the next 10 years. I think that's what you mean, right?
Yeah, I didn't mean that, but that probably makes more sense.
So they still have an income. They're still spending on what they need to, and they're still working, but they just have 4.2 Bitcoin and it's just sitting on the side. It's in cold storage. With 4.2 Bitcoin, they'd be able to retire by 2036. So they have 20 times their annual expenses. You can see that here, 20 times, 19.77 times. But then on top of that, let's say your annual expenses are 100K. Where is that? Annual expenses are 100K on column K, 97.7K. If you wanted to borrow against your Bitcoin, you'd be able to borrow against 10% of your stack with 50% LTV. So you're giving them
And not have to
180.
sell it.
Sorry?
Then you wouldn't have to sell any of it.
Then you wouldn't have, exactly. Then you wouldn't have to sell it.
Okay, so you're borrowing on 10% of your stack. It'd be really interesting to see how much, if you borrowed on 10% of your stack 1 year, how much you would have to borrow percentage-wise of your remaining stack the next year. That's not what that's calculating though. That's individual years, right? Based on
This is individual years. But what you could
Yeah.
do is, like, let's say for example, you could have like a barbell, or not a barbell, a ladder, where you borrow 1 year, and then you borrow against again the next year, and then you borrow again the next year. You use your collateral, and you set it up in a way where you don't have to give the bank too much of your Bitcoin.
Mhm.
So let's say you do this when you can pay. Okay, so in this case, let's say you do this when 5% of your stack is enough to pay for your monthly expenses. So 5% as collateral, you give the bank 5%, they give you fiat, and then you pay for your expenses. So where would that be? Your expenses would go to 118K by 2040, 130K by 2042. So 130K 2042, you'd be able to borrow against 5% of your stack at a 50% LTV. You'd be able to get 150K. So you could pay for your expenses in 2042. But then what you could do is, let's say first year you borrow against 5%, then the next year you borrow against another 5%, then the next year you borrow against another 5%, and then the fourth year, and then the fourth year you borrow against another 5%, and then the fifth year you can basically go back to the initial 5% that you borrowed against, and you can borrow more against it.